Hey Richard, this is Ryan with TrendLizard.com. I want to thank you for subscribing to our service at TrendLizard.com. Thank you for sending me a few tickers to analyze for you using the Elliott Wave Theory. You sent me 3 tickers. You sent me SQQQ, which is the ultra short version of the triple Qs. You sent me, I believe, SPXU, which is the short version of the S&P 500, and finally CCL, which is Carnival. So we're going to take a look at all 3, starting with SQQQ to start. So here is the first chart. This is a little different view of SQQQ. It is on a log scale, a linear scale, where every box here is just 1,000 points. I wanted to look at this guy in a little bit of different view just because of what it produces here. This decline off of its inception in 2010 is a pretty nice 5-wave move and then basically petering out over time. And that's one of the problems with these leveraged funds is the contango effect where they decay over time regardless. And that's why right off the bat, my advice would be if you want to trade ETFs like this, that you base these trades on the underlying ETF, in this case QQQ. So if you're bearish on QQQ, then you would make a move on SQQQ as opposed to trading off of the SQQQ pattern itself, because the pattern from QQQ is going to be substantially cleaner and a better representation of social mood as we see here. So this is the triple Qs. Its advance off the 2009 low. It's been setting new highs just recently here in 2020. It's the only ETF really to do that. We have reason to believe that a high to this bull market might have already occurred, but triple Qs is certainly in a different scenario on its own because it's the only one setting new highs. Nevertheless, I'm going to take a look at SQQQ for you with the disclaimer that I'm not a big believer in trying to apply the Elliott Wave pattern to things that are kind of derived from a derivative, if you get my drift there. So anyway, here's a look at SQQQ dating back to 2010. It's basically been a straight line advance since then. There's been reverse splits left and right. That's why it says it started at 20,000 and is now trading for somewhere around $7.50. Obviously, this thing is a dying asset over time. Like I mentioned, the decay. You can try to label it a ton of different ways when you have something that moves this directly lower. It doesn't have a very clear pattern, and again, that's why it's not really some great representation of social mood, which is the purpose of the Elliott Wave Theory, is to understand the underlying social mood of the development of a trend. So this is what I come up with when I look at SQQQ. Basically, you get that first 5-wave advance that I showed you on the linear chart, and then a first and second wave here. So that's the 5-wave move for the first and second wave, and then the development of a large third wave that may or may not be complete as is. Whatever the case may be, it's obviously been in a massive downtrend, and there's obviously been no indication to this point that that downtrend is over. So let's zoom in a little bit. This looks at that decline off the 2019 low, so basically just this decline here off the last substantial bounce, notwithstanding the 2020 bounce, which is shown here. So what we can get off that 2019 low is a nice 5-wave decline to the downside. It's possible that it could be nearing a low to that move based off of this action here. You can see that wave 4, despite coming close, did not overlap with wave 1, which is important when trying to identify a trendy wave or a trendy move. So it's possible that it's getting closer to a low. Regardless, I mean, this thing has gone from 20,000 down to $7. There's no reason to think that we're on the precipice of a major low at this time with the decay factor on this ETF. Let's zoom in a little bit closer and look at what's happened in 2020 here. Here's the decline. Again, it's such a straight line move. It's gone from 33 down to about 8. You can label it a ton of different ways. There's just not large bounces along the way. And until you see a larger bounce, this just isn't going to be a good investment. I mean, you have to find something that's trendy to the upside to indicate that a more important low is in. For me, it would take a move above 1025 before I would be interested in SQQQ. Otherwise, this decline is going to be able to continue. Again, it is possible that it's getting closer to a low for the decline that began in late 2018 based off this 5-wave move. But until you get some proof of that, I think you have to expect lower levels ahead on this guy. Okay, so here's the next one that we're looking at for you. This one is SPXU, which is the ultra short S&P 500 ETF by ProShares, I believe triple inverse leveraged S&P 500 ETF. So very similar to the first one you sent me. And again, I'm not a fan of analyzing inverse or leveraged ETFs as their own standalone unit. I'd much prefer to look at the underlying ETF, which in this case obviously is SPY. So if we look at SPY, we have a very nice chart here that shows us exactly what's gone on with the large 5-wave advances, counter trend 3-wave pullback, so on and so forth. There's certainly some indecision that's happened off the 2018 high, a lot of back and forth, not very much trendy action, at least not to the upside, and some indecision there and the potential for a larger pullback, as you will see in our day-to-day analysis at TrendLizard.com. But if we keep our focus to SPXU, we find what could be a large 5-wave advance that's still underway, started in 2009. Certainly some funky action in 2020, as we know, but still a downtrend that looks like a 5-wave move that is not yet complete at this point anyway. And the only way I come up with a labeling like this is just basically finding the only large bumps that have occurred over this time that fit as kind of the larger counter trend recoveries. So if we zoom in and look at just what's happened in 2020, we see that the trend is still down. It's not exactly clear how to label it. This is the best labeling that I can find at this time, but I think the important thing is that this action off of June's low looks like counter trend movement to the upside, which keeps the trend pointing lower on SPXU. So again, you find a very large downtrend, basically from 7,000 down to about $12 at the close today, and really no indication of a low. You look at the very short-term action, you see there's still no indication of a low. You're still getting trendy action to the downside, no indication of a larger recovery, counter trend action in June. Everything continues to point lower. So if the goal here is trying to find a major low on SPXU and trade it that way, I'm not a fan of it at this time. Once you start seeing some more clear indications of a larger recovery, a more important pullback on the S&P 500 or the SPY, then you can trade this guy. I do not, again, recommend trading this guy based on its own merits, from its own Elliott Wave pattern. It just doesn't work that way. So let's move on to your third ticker here. We're going to look at CCL. This is Carnival. Obviously, it's had a very interesting year so far this year. If you go back to its inception back in 1989, it's only been bullish up until this year. You've had a really nice trendy 5-wave advance into the 1999 high. From there, a very clear and obvious counter trend 3-wave pullback into the 2008 low, I believe it was, and then a nice 5-wave advance into the 2018 high. From there, it chopped around a little bit and then was absolutely destroyed in 2020, like so many things were. So if you look at what the damage that was done by this pullback here, it retraced too much, more than 61.8% of anything that you can draw to the upside. So every trend, every strong up move that occurred to this point ended. It no longer matters. The only thing that matters now is what's happening to the downside, because it is a larger degree move for a fact. Because it retraced this entire 5-wave advance, it has to be a larger degree move. There's no other way to make sense of it. So with that in mind, let's go ahead and zoom in and look at the destruction that's happened in 2020. So here's what we have in 2020. We've had a very sharp 5-wave decline, trendy move off the 2020 high that took it basically from about 52 down to, I think, 7 or wherever it found this low in April. Since then, it's been in a very nice recovery, no doubt about it. It's gone from that same level up to about 25. It's been pulling back since. But it does not look like this is a major low. Everything about this recovery effort looks to be a counter trend move at this point. If you look at the recovery in April, it's a very clear 3-wave move. What do we know about Elliott Wave 101? Trends happen via 5 waves, which is what we saw to the downside here in early 2020. And we know counter trend moves play out in 3 waves. So if you look at this recovery in April, looks like a 3-wave move. That wasn't the end of the recovery, but then the recovery continued and continues to look just like one counter trend 3-wave move. So you're getting trendy action to the downside. You're getting this recovery that's been very impressive, not as impressive as the decline, but still very impressive. But it's still a counter trend move, right? It's a 3-wave move. So if there's no reason for us to call this the start of a new trend, it's pretty hard to be bullish on this guy in that scenario. So it is possible that this counter trend recovery will continue, but there's no reason to think that this is the start of a new golden age for Carnival based on its Elliott Wave pattern. Instead, we have to think that this is a counter trend or against the trend recovery that will eventually be retraced to the downside. A move below 14 would be further proof that this is just a counter trend effort. And if we zoom in and look just at this pullback in June, we see that currently it is a three-wave move to the downside. Now it can develop into a much sharper decline as it goes, but the point of this is that if it moves above 1925 at any point, it would be a good indication that this counter trend recovery is not over and that it will continue higher, maybe deeper into this yellow support area. The problem we have is we just want to trade trendy moves. We don't want to trade counter trend moves because they are unpredictable. So certainly if it goes above 1950 and then is able to get up to 30, that's a great move. That's a move that anybody would want to trade. From an Elliott Wave perspective, it needs to be trendy for us to be able to understand it and for us to be able to trade it, because that's what makes it predictable. So hopefully that's helpful. Those are the levels to keep an eye on CCL. Overall, I can't be bullish on it. It's a counter trend up move, not the start of a new trend. At some point it will break down. Maybe not right now, but we'll find out. Keep an eye on that 19.25 level. So I hope that's helpful. That's all I have for you. Have a wonderful evening. Thanks again for subscribing at TrendLizard.com, and I will talk to you soon. Take care.